All right, I'm back. How's that?
Hey!
Hey!
Hear you now. What's
Boom.
up?
Wait,
What's
is Gary
up?
V
What's up,
coming on the
man?
show, or what were we saying?
Gary
Hey,
V
you
on
know,
the show tomorrow.
What
We've
time?
been working hard, man. We've been working hard.
11:15 a.m. Eastern time.
ET. All right. I might have to tune in for that one.
You should.
Definitely,
You should.
definitely.
And you know how Spencer Israel is. He probably won't listen because he just likes his own thing and not supportive of others. But I mean, Gary V's a big one.
This is the
That's a
guy
big one.
that brought up TikTok like 4 years ago, guys.
This
Like
guy is ahead of the
tomorrow.
curve. Ahead of the curve.
Yes,
Jason
way ahead of
Raznick.
the curve.
I'm getting word. I got my earpiece in. I'm getting word from the studio that Gary V he doesn't think he's coming tomorrow.
Wait, who said? Who said he's not coming?
Jason, what happened? Did we get a
he's
connect you
promoting
don't
a
have?
disbelief. Let me get some clarity.
Did we get a connect that Jason Raznick
I was going to show you.
have?
I can't hear anything, so don't. What are they saying?
Nothing.
What's up, Brad?
Okay, so Gary V truly coming on.
He's coming out.
I hung out with Gary V in Cleveland. When you talk to Gary, maybe he remembers. We were at the Cavs championship game. I was trying to find you guys a photo. Oh, there we go. Where am I looking here?
There he is.
I don't know. It's on delay.
We see it.
We see
Too hard
it.
to see. Okay.
We see
I'll
it.
move up.
You might have to get it closer.
Oh, look at
There
that.
we
Look
go.
at that.
There we go.
And you know it's Gary when he has that Scully on.
Yep.
My man loves his Scullies.
Look at me now. I was skinnier then. So, all right. But guys, I am on a public diet, so you guys can hear. I was 217 after this trip, 211 today. So that might have been some weight. So in 2 weeks, if I'm not under 200, I have to send every viewer $20. All right. So how many viewers do we have here on this right now?
490.
490. So 20 times 490.
10 G's, right?
10 G's. So I have to send $10,000 that if in 2 weeks I'm not under like 205. That's a fair number, right?
Mm-hmm.
Okay. That's the deal. All right. Thanks, guys. I'll catch you later. Got to go make some trades. Peace.
Let's do it. All right, guys. I'm going to go ahead and get the power hour started. The best way we know how. Get those hands up. It's time. Get ready.
Let's get ready to rumble.
Benzinga Nation jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there.
Where's he, Tony?
Tony is saying, Jason, good luck with your weight loss. Everybody's trying to be an asshole, say he's not going to do it. They want their 20 bucks.
They can't hear you.
Tony is in for you.
All right, guys. We saw the comments. Here we go. I did say 200, but that's 11 pounds in 2 weeks is kind of a lot. So we're going to say 205. Producer Rohan, he can't hear me, I guess, or maybe he can.
I can hear you.
He's going to order a scale. I'll do a weigh-in every 2 days. It'll have a digital output read. Every 2 days, I will weigh in here on the show. So that's what I'll do. Now, Rohan, they want to know if the screens behind them are going to show anything else. Are you going to show some charts or anything like that, some stock stuff? They want to see some stuff.
It's a work in progress.
Rohan.
Right now I can show some other stuff.
Oh, yeah. Rohan said he's working on that. In about 10 minutes, we'll have some other charts. Just give him a few minutes. Okay. And then Wingstop, that's a problem. I ordered Buffalo Wild Wings today. And so are wings really that bad? I think the key is not to eat bread. Not to eat bread. Wait, is 6 pounds in 2 weeks not possible? I think it is. Oh, they're saying 2 pounds a week. I got so much extra weight on me though right now, guys. I mean, come on, look at this.
2 a week is like what doctors say, and what they're really trying to say is 4 a week.
Look
like
at
when
this.
you look at something, it says use this. Take an Advil once every 6 hours. Take 2 every 6 hours.
Come on, I've struggled with weight loss, but I have the Zinger Nation community on our side, except for Steve Delaney. He really doesn't want me to lose weight. So other than that, we'll do it. Okay. We're in this together. Remember, Zinger Nation is one. We're a community. You have our wings? Okay. Aaron has the wings. All right. I'm the carbs
tomorrow.
No, today the wings don't have bread on them. I don't think. I did get cheese quesadillas, but those are going to be for other people. I ordered a bunch of wings and I got quesadillas. Cut on bread, cut on fried food and sugar. All right. And then you guys, it's us versus Steve Delaney. We can do this. Okay. All right. All right, let's do this. Luke's gonna get to stocks. This is the Trade and Idea Show. We bring the ideas. That's what we do here. We love you, and we'll have to move the reading thing of these things. We need another camera over here, Luke. But they're working on it. They're working on it, guys. They're working on it. Steve Delaney, I love you though. Don't worry. Peace.
All right, so we're all piling in on Steve Delaney today. That's the name of the game. You know, last week we gave out some prizes for best joke of the day, specifically some jokes about John Deere when they got added to the space ETF. Today we're making Steve Delaney jokes. What's the address there? I'm ordering pizza. That's hilarious. All right, Steve Delaney might win his own joke competition. But all right, guys, let's get rocking and rolling. Let's dive right into it. As Jason mentioned, this is the Trade Idea Show. This is the Power Hour, baby. That's why we're spending this time together. Ideas coming from myself, coming from Jason, coming from our special guests, and most importantly, coming from all of you out there in the chat, all of you out there in Zinger Nation, hanging out with us on any given day. I am ready to get rocking and rolling today, guys. A few things that I have on the docket to talk about. We're going to do covered calls. That was a hot request from yesterday. I do want to talk a little bit about OTC slash some penny stocks. It's not something we've covered. I get a lot of questions about it. We did talk about that one little hydrogen stock yesterday, so we can talk about that. Trimble, ticker TRMB. We hit a swing trade on that one. We got to check in on where that trade is at, how we're managing it. As I mentioned yesterday, we're still long the trade. We're still long the stock. But we might be navigating out of the trade. And then last things last, if we have time, I want to talk about Ford. Y'all know I like Ford, and we might get to that one. And boom, sleeves are rolled up. That means it's action time. It's go time. We are ready to get cooking today, guys. I have all the pens that I need. So if you have stocks to take a look at, drop them in the chat. We'll check them out. 12:30 today. Jonah Lupton joining us once again. Favorite of the chat. Favorite stock picker. He's going to be dropping those, and we're just going to get going from there. Does that sound good? All right. I see somebody in the chat saying, let's get it. Then I'm going to have to agree. Let's get it. All right. Let's start off in the world that we don't normally start, which is the world of OTC stocks. And I guess let's talk about penny stocks specifically. Okay. And let me get my screen share ready here. Share screen. There we go. All right. So penny stocks. I get asked probably more questions about penny stocks than anything else. And I understand the appeal, right? These are the stocks that can make massive runs, but they're also the stocks that can absolutely blow up in your face. My first brokerage account that I blew up, and I blew up 3 between the ages of like 15 and 19, somewhere around there. I blew up 3 accounts. The first one that I blew up was following penny stocks. And so basically I've got 3 tips for if you're really interested in that space, you want to go find some of those stocks. Here are the criteria that I look for. First things first, stock promotion, avoid at all costs. Right? If you are hearing about the stock, you're finding out about it because you got some sort of a newsletter or you saw some sort of an advertisement that said, hey, this is the stock to buy. Go hit this one. Chances are that the price action in the stock will be fleeting, right? The stock has already run up because they're putting money to market the stock. If you're finding out about the stock that way, you're probably late to the game. Solution number 2 or tip to look at number 2, real revenue. Whenever I'm buying a company, I want to see real revenue, right? I don't want to see, hey, we think that we're going to generate revenue a year from now, 6 months from now. We have some asset that's worth XYZ. I want to see the company actually generating revenue, and I want to see an income statement that I can actually understand, right? It breaks down costs in a way that makes sense, etc. Criteria number 3, I'll look at their investor relations website. Right, I want to see a really developed investor relations website, and not so developed that when you go to the main page of their website, like where you would be a customer to buy a product, they're just advertising the stock. When I say developed, I mean I want to see an investor presentation. I want to see that they speak at conferences. I want to see that they provide regular quarterly updates. They may even have conference calls for their investors. So those are the 3 criteria that I like to look at. Again, we don't talk about these stocks often on the show, because they are not a favorite of mine. I've lost more than I've won picking these stocks. But again, you can absolutely grab winners out of them, right? A stock we talk about on this show a ton is our Voyager Digital, right? We can see the average price, 66 cents here. Stock last traded, $34. And so you can make these massive runs, right? I'm not going to get a 5,100% return on anything else. But again, I think that they're tough. If you are so inclined that you need to get into that space, you want to look at some of those names, that those are a couple of the criteria that I recommend. And I'm curious too. I'm going to throw this one out to the chat. If anybody else has favorite penny stocks of theirs, drop them in there. I'm going to throw some of these up on the board. I see Happy saying Pong F, HMBL. I don't know what HMBL is. IMVU. And then my favorite, Christian Gallagher. His 3 tips for penny stocks: 1, don't buy them; 2, sell them if you have one; and 3, don't look back at them. Which is more or less that's where I hang out. I see a couple other names popping in there. So again, I get a lot of questions about these. That's why I wanted to make sure to talk about them. I think that if you look for those 3 items, you're in a decent position. Then if you're just trying to guess, again, we're trying to avoid stock promotion. We want to see real revenue and a P&L statement that we can understand. 3, we want to see an investor relations site that provides some serious transparency. So there's our spiel on penny stocks to get the day warmed up, to get things going. And what was that? While we're on it, what was that water stock, the hydrogen water stock we were talking about yesterday? It was like that 8-cent stock. We had Ash dial in and gave us the lowdown on it. It was like LTVN or something like that. Does anybody remember the name of that ticker? LVNT. No. LTNC. There we go. All right. All right. I'm throwing this one out to Zinger Nation. First ass that I'm making of the day. First air horns of the day. Boom. There it is. All right. Throwing this one out to Zinger Nation. If anybody is in this stock, drop the 1 in the chat. I'm curious. Does anybody like this thing or not? Are you hanging out in the name? But all right. Stock last traded 7.6 cents. Looks like it's down about 0.5% today from where we talked about it yesterday. Again, if you guys recall, we talked about this one because I've seen it all over social for the past few days. Didn't know the story behind it. We had somebody come on to the show, gave us the rundown on it and sort of explained, hey, yeah, it's sort of just a hype thing. They sell hydrogen water, which I don't know what the product is. I don't know the company. I don't know the story. I'm not trying to be a hater. So if this is your stock, apologies. But I don't know. No, nothing interesting today. We'll look at this one a couple more days this week. See if there's any energy or momentum that got into it. But all right, we'll take a look at that one. Next up on the list, let's look at ticker TRMB. TRMB. Tango Romeo Mike Bravo Trimble. We are going to make a trade on the show. As I said at the top of the show, this is the trade idea hour. We are trading in any trade that we make in our live portfolio, which you just had up on the screen. Boom, here it is back up on the screen again. Any trade that we make, we try to make it live on the show. Having a decent day, right? I'll take a day where we're up 330. Is SPY still down today? Let's see. So SPY's up a little bit, so it's not a great day. We're just hanging out. But all right. Ticker TRMB Trimble. Let's talk about this one. All right, some action on this name. If you guys recall, we hit this stock on a swing trade last week. Whenever I am going to pick out a stock, I need to have 2 things. I need to have some sort of a catalyst or a story. I also need to have a number to back me up. Okay, so check this out. TRMB. Let's look at it. TRMB. All right, number side of things first. We saw the stock. It was coming right up to this previous resistance. That's so small for you guys. There we go. All right, we saw the stock coming up right up to some previous resistance. It looked like it had a chance to break out, so we went ahead and we hit the stock long. The story side of it was that it got added to the Cathie Wood ARC X ETF. It's the biggest holding in that ETF, so we like that because it's going to drive some social energy. It's going to get news chatter going. It's going to get more people thinking, talking about the company. So that's why we went ahead and we hit the trade long. You know, as you can see from our entry price here is 76.70 that we got into the name, 8.5% gainer. I mean, we did that in 4 days, right? It's not the type of trade that is going to make us $1 million. Whenever I can make 8.5% in a couple days on a swing trade, I will take it. I will run to the bank with it. So I am going to go ahead and close this position out. I told you guys what I was going to look for to close the trade. I was already satisfied with the price action, the gap that we got yesterday. I said when the momentum cracks, you know, we're going to go ahead and exit the position. If the momentum keeps going, we'll let it run. You know, I don't want to be the one to say, hey, you know, it popped this day. I could have sold it then. I said, hey, the momentum is behind it. I will let it run. We see it. The momentum has popped today. So we are going to go ahead, close the stock out. We are going to take our money. So we're going to sell. Come on now. See, we need some more sounds.
Mama.
All right. We're not going to be able to sell this thing. We always run into these issues trying to trade this. So I'm going to have to do this on the show. So again, guys, the trade of the day that we're making, I've got 2 trades. We're going to talk about price action and 2 more stocks that I have in the live portfolio. So stay tuned. We're going to get to those. Again, we've got 1 long-term hold we're going to dig into, 2 long-term holds we're going to do, and a swing trade. 3 more stocks today. Then that's even before our guests come in. Yeah, see somebody saying this is annoying. So we will exit this. Jot it down in your notes. Closing Trimble right here, $83, pretty much on the dot, 8.5% from when we entered it last week, and we will move on from there. All right. Let's go ahead and take a look at some in the chat. All right. So if you're this is what we're gonna do next. So if you're just joining us, I've got 3 existing positions that I want to talk about. I want to dig into today. I have 2 more live trades to make. So I've got a swing trade, and then I've got I've got a swing trade, 2 long-term holds to dig into. So hopefully we'll have time to get to those today because I want to get some more trades in front of you guys. Again, this is the Trade Idea Show. That's why we're doing it.
Turn down for what?
That was a nice one. But before I keep going, I always promise the chat we're going to look at some stocks, some tickers in the chat. So let's go ahead and take a look at those. Funko. Let's look at Funko. Wow, what a day. This chart looks nice. I have not looked at this stock in a little while. If you guys recall, I think it was 3 weeks ago, we sold puts against this stock. We basically made all of the premium that we can make by selling the puts. Oh, Neil Hamilton's calling. I'll answer my phone. Let's see. All right, Neil, what's up, man? You're here. You're on the show.
I just wanted to distract you a little bit. I have a question. Can you talk after the show?
About what?
Time after the show.
It depends what it's about.
Mostly Benzinga.
Not interested.
Okay, see ya.
All right, see ya. Thank you, sir. All right, Funko, ticker FNKO. Pretty nice looking chart here, quite honestly. We sold puts against the stock a couple of weeks ago. But basically, what the scenario was, I don't remember what. We won, quote unquote, won in the trade, in that we collected all the premium that could be collected from the stock from the put selling, and basically the risk that we took on is we have the agreement to buy the stock at a lower price than it was trading at. If the stock price fell, stock price didn't fall, so we collect the premium. We don't get the stock. The chart looks good in my opinion, especially I love to see it up, 5% on a day where. We're still talking a little bit about this rotation into value. So I am going to throw this one out to the crowd, guys. Zinger Nation, I'm making the ask. You got to call it out there. If you guys like Funko, and if you don't like it, throw me the 2. Again, I want to see where everybody's at with this one. Again, one if you like the stock, 2 if you don't like it. Throw me some wisdom there, guys. Double the loot, double the fun. We're just sort of screwing around, baby. That's what the Power Hour is all about.
Excellent.
Yeah, there we go. Boom. All right, and we got a mixed bag on Funko. I see a lot of you out there not voting, and so then I'm going to make this ask as well, guys. But before I get to my next trade, we're going to do swing trade next. All right, here's the agenda. All right, I'm going to go fast. You think I'm talking fast now? We're going to go faster. We're going to go swing trade, long-term investment, ticker out of the chat. So start dropping those in, and then we're going to bring our guest on who's going to do some stock picking. All right, so swing trade, long-term investment, chat, guest. Within the next 30 minutes, I guarantee we will be at 8 more trade ideas. So I'm going to make the ask to you guys, share the stream, like the stream, get this thing out there. If you're in a Discord, drop it in. Say Luke is about to drop some ideas right here. We're going to have Jonah Lupton on. He's a great stock picker, runs a fund at Social Capital. He's going to be dropping ideas on here. So that's the move.
$1 million.
All right. First things first. I'm bringing Neil up here too because I'm going to be dramatic right now. All right, Neil. Yesterday I took a YOLO effing trade. I took a major YOLO trade. It was not for no reason, but it was a hell of a YOLO trade. They laughed at me. They said, "Luke, get out of here. What are you doing? This is the worst trade of all time." You know, I got harassed. I hit the trade anyways. Ticker EBS, Emergent Biosolutions. You know the stock, Neil?
Mm-mm.
You should know it. It's infamous. They screwed up the Johnson & Johnson vaccine. When Johnson & Johnson had to stop the shipments, future shipments for the vaccine, they were the ones that made the mix-up. They basically, I think they combined orders from 2 different customers. So that was the move there. The stock got hammered on that news. You see a gap and 2 big red candles there. I saw the stock was coming into some support, right? Yesterday, when we were looking at this, the stock was sitting right here, right on that support, some previous buying. Plus, the company came out and they said, this screw-up is not going to affect our 2021 guidance. This screw-up is not going to affect our contractual obligations to fulfill vaccines. So we are okay. Yes, we screwed up, but the company is fine. I think this is a one-time item. I don't think it's going to have a big financial impact because, again, they said it's not in their guidance. So we hit the trade long. Again, we were hoping for a bounce off of support. We've got a little bit of action today, not much, right? You got the stock up 1% on a day when the S&P is up like 0.2, 0.3%, something like that. Not doing a ton for us yet, but I'm hanging with it, watching it closely, and we'll see what happens to this thing.
I can hardly believe it myself.
Yeah, it's a win because it just didn't break down past support. Held support, going long, hit the soundboard. Yeah, good job, Luke.
All right, so I said I was going to do a swing trade, a long-term trade update, and then we're going to pull one out of the chat before we get to our guest. All right, so there's the swing trade. EBS, hanging out in it. If you're in it with me, great. If not, whatever, you were a hater. They laughed at me yesterday, Neil. They fucking laughed at me. All right, trade number 2, ticker F, Foxtrot, Ford. We haven't talked about Ford in a little while, guys. Ford 2021 stock of the year. Again, whenever I get into a trade, I need to see 2 things. I need to see numbers and I need to see a story. If I don't have both of those, I'm not getting into it. Number side of things, valuation looked fine, right? Stock is trading in line with the automotive industry. The ratios are okay. Growth is okay. Margins are okay, getting better. Dividend could come back, etc. You've got that whole sort of thing. So that's why the stock looks good on the number side of things. The story, the big story, EVs. Right, we see what I call this EV energy. You know, you might have heard the term big D energy, EV energy. That's what I'm talking about right here. That's what we've seen the share rise in Tesla and NIO and whatever you want to call it. Ford signaled to us that they're going to spend a ton of money marketing and launching their EV platform this year. Right, they've got their first vehicles coming out. They're going to be pushing the products, etc. Running all the TV commercials. I saw some energy flying into the stock. That's why we hit it. We've been in a little bit of like a consolidation station for the past couple of weeks here. Nothing super interesting going on. Stock staying above that $12 level, below the $13 level. We made a run today, right? You can see these are daily candles that we're looking at. We're pretty darn zoomed in. We made a run to 13, got rejected. I think the stock still has a chance to make a run up there. So I'm hanging out in it long, but I am going to hit a trade on this thing, Neil Ski. And while I'm pulling this up, I'm having interactive brokers issues today. But while I'm pulling this up, Neil, do you have any opinions on Ford chart? You're Mr. Technical Analysis.
Yeah, I mean, you got to look at volume. Ford is good. Ford is strong. I would be in Ford right now. I am in Ford right now, actually. It's funny you said I bought Ford yesterday. So it's breaking out of that sloping consolidation. If you could draw a line on it, but you can't.
All right, here's the move, Neil Hamilton. We're gonna sell some calls against Ford. All right, live trade. Boom. We already did one. We sold Trimble. I give you the update on EBS. Now we're gonna make a trade on ticker F Ford. We're gonna sell some calls against the stock. Okay. Our average price in Ford, if we go back to the portfolio, is about $8.50. We're already up very nicely in the stock. Plus, we have calls, right? We've got the $12 strike 2021 calls. Again, we bought those when the stock was about $8.50. I'm going to start selling covered calls against this stock on a very consistent basis. Basically, what I do when I sell covered calls is I collect premium right away. Right, I get paid for taking on some sort of a risk. The risk that I'm then taking on is that I might have to sell my shares of Ford to somebody for $14 at some point of time in the future. Okay, so I'm looking at the 14 strike calls. I'm going 24 days out. Let's click on this here. We are going to sell some of these. How many shares do we have?
I have the exact opposite thesis. I'm going long Ford. I'm going to buy.
No, I am long. I'm long. I own stock. I own calls, and now I'm selling calls against it.
Okay.
Right. So we're selling some covered calls here. Right. We're going to sell 5 contracts, 24 cents a piece. So you get $24 a contract, 24 times 5. So we're going to get $120. Not a ton of money, right? It's not crazy money. It's not FU money by any means. But it continues to lower our average in the shares that we own. Plus, again, the stock has already hit our price target. So we'll just continue to sell this regularly. There's no reason not to. The thing would be if the stock climbs above 14, let's say it makes a bull run to 15, right? 12. Ford, I don't think is going from 12.50 to 15 in the next 24 days. But that's the risk that we're taking on. Again, it's not like we're making a ton of money, but we can do this every single week and just continue to sell these forward-looking calls. Because again, the stock's already hit our price target. If I get more upside, great. If not, just continue to lower that cost basis and take some risk out of the trade.
I just want to say that on a break above like $13.60, the price target's about $15.
What are you looking back? Like 8 years? Here's the 10-year chart.
Nope. Just I'm looking at right now, just using a Fibonacci.
You got your fibs.
Mm-hmm.
Yeah, we'll make some new 3-year highs. All right, Neil. Our next guest is ready. I don't know what your plan is. Like, I don't know if you're hanging out or what, but
no, I got some work to do. Good seeing you, everyone. Get Tactical every day at 9:30 a.m. Tune in. It's better than this. It is. It's better. Oh,
that's hot. That's hot.
Okay.
All right. Peace,
Good luck,
Neil.
man. See ya.
Thanks for coming on. All right, guys. There we go. So we hit some updates. We talked about the EBS. We talked about the Ford trade. We talked about the Trimble trade. We will keep them flying. But of course, I don't want to make our special guest wait. I mean, he's the man of the hour, much more so than I am. And he's going to go deep on a couple stocks. So let's bring him on. Jonah, what is up, man? How you doing?
I'm good. How are you?
Doing well, man. Thanks for joining us. The last time you were on, we brought some positive energy. We single-handedly turned the market on a shitty red day to very green. So
I remember that.
Yeah, I mean, let's see what we can make happen today.
I'm up 2% today, but maybe we can go even more green.
There we go. You turn 2 to 3. Okay, nobody's going to complain about that.
See, for me, today's all about Transmedics. So Transmedics has their FDA panel hearing today. So the stock's been halted since this morning. So that's what I was watching. That's what I'm watching all day. I actually canceled all my calls and meetings today just so I could watch the panel hearing all day. So you guys are the only meeting I actually kept on the calendar.
Well, so a couple things to say about that. First of all, we are very thankful that you come and hung out with us. I've been like bugging producer Aaron. I'm like, dude, we need to get Jonah back. I probably asked him like 18 times.
Me
so
3 times a week.
All right, I know. Okay, I'll tell him to lay off, but he's doing it because of me. You're like one of my favorite guests that we ever brought on. Okay, so
I appreciate
it. so that's why I'll take the fall there. But all right, so Transmedics. So you're saying you're watching this FDA panel hearing. What are you looking for? It's basically a decision date. Is that what's going on?
So I'm not an expert in this stuff, but the way that it typically works, so Transmedics did their presentation this morning, starting at about 9:30. I think they went for about an hour and a half. So they go through all their slides, they bring on their experts, they build their case. And then the FDA comes on and does their presentation, which goes at least an hour and a half. I mean, they have like 200 slides to go through, which is insane. So I'm guessing they'll probably be on for even longer than the hour and a half. And then I believe around 3 o'clock is when the panel starts the discussion. And then around 5 or 5:30 is when the panel takes the vote. But I believe that the FDA then has another 30, 60, 90 days to actually give their decision. So it's a big deal. I mean, if they don't get FDA approval in the next 60 days, it's not the end of the story, depending on what the decision is. Transmedics can obviously, I think they just have to run a new trial. I'm not really sure. I mean, we'll cross that bridge if we get to it. Hopefully we don't have to. Hopefully approval comes. If approval comes, I think this is a $55 or $60 stock in the next month and a half.
Okay, and so basically, let me ask you this: is what you're watching for then, or like you're taking time out of your day to listen to this for a reason? Is it because you will have a sense as to what the FDA is going to come back with in like that 30, 60, 90-day period, or what exactly is on your radar for today?
Yeah, I think usually whatever the panel says, the FDA is typically going to go with. So I think it's the discussion after the FDA finishes their presentation. It's the discussion that's going to be very important, basically Q&A, and then it's going to be the vote around 5:30 that I think will drive the price, the stock over the next week or two. I mean, certainly tomorrow, right? So yesterday the stock sold off about 13 or 14%, which was a little weird coming into the hearing.
Okay.
I have some guesses as to why it sold off. I think it was probably some big funds shorting the stock and then buying the call options, but I don't know that for sure. It's still a small cap stock, so it's easy to manipulate, day to day. So the stock did sell off coming into this. If the panel votes against approval, like I said, it's not the end of the story. My guess is, though, if that happens, the stock opens up maybe 15 to 20% lower tomorrow, which would obviously be kind of brutal. If the panel votes yes at later today, I would expect the stock to be up at least 20 or 25% tomorrow. And like I said, I think the stock goes 60, 70% higher in the next month.
Okay. That's interesting. And reopening, right? It sounds like it's going to be tomorrow morning. Pre-market is when we'll start seeing some action in this name again.
Yeah, I mean, my guess is they won't unhalt the stock today, so it won't trade after hours. At least I wouldn't think so. My guess is they have it halted for the entire day, which includes after hours, and then they open it up tomorrow morning, most likely. But I mean, you don't really know for sure. And then, tomorrow, obviously, depending on what the volume is and which way it's moving, I mean, we could obviously see some halts in the middle of the day. But so tomorrow should be interesting. I thought today, I didn't think they were going to halt the stock the entire day. I figured they would let the stock trade during the day and then halt it at the end of the day before the panel voted. But, I guess they're just taking some precautions so you don't see the same sort of manipulation today that we saw yesterday.
Yeah, absolutely. All right. That one's interesting. Can I suggest the next one we talk about?
Yeah. Go for it.
All right. So and you might not like me for this one, but part of the reason why I had producer Aaron reaching out so much and bothering you a couple times a week was because after our call, I tried the Celsius drink.
Okay.
I went hunting. They didn't sell it at my gym or at my typical 7-Eleven. Made it to the grocery store, found one, was pretty thoroughly impressed.
Which flavor did you get? Do you remember?
A cola one, I think.
Okay, yeah, that's pretty good. I mean, it sort of tastes like Diet Coke, right?
Exactly, and I drink too much Diet Coke. I buy a lot of Diet Coke. I keep a 12-pack in the car actually for convenience.
Yeah,
but that's another discussion.
So Celsius is probably a healthier version of Diet Coke.
So there we go. So I'm glad that you came on, told me about the company, so I had the chance to try it out, gave me something new to go after. Any different opinions or thoughts on this one from an investment standpoint?
No, I mean, I think so. The stock sold off when they reported their Q4 earnings. They didn't blow out the number. I think people were hoping that they would just based on the numbers that they saw in Q3. So if I remember, Q3 was somewhere around up 80% year over year. Q4 was somewhere around 54% year over year. So I think people were hoping for more than that. But I think the problem that was happening, and if you look through social media, especially Twitter, you can tell a lot of shelves were empty. There was demand for the product, and there just was not enough supply. Shelves were going empty, and the main reason that happened is because Celsius had been doing DTR, which stands for direct to retailer, which means that when stores run out of stock or they're starting to run out of stock, they place an order, but then the shipment gets delivered from their warehouse or their distribution center. So that distribution center is kind of acting as a middleman. But when the product shows up at the store, it's the employees that are responsible for, stocking the shelves and making sure that those shelves are always stocked. The company has already said that they're switching over to DSD, which stands for direct store delivery. So they now
okay, sorry, go ahead.
Yeah, so they have 150 of these regional DSD partners who are going to be responsible for delivering Celsius product directly to the stores and keeping the shelves stocked and making sure that all the displays are set up correctly. And, you'll hear stories about like the Red Bull or the Monster DSD guys go in there and they push, all the competitors to the back and line up their products in the front. It's pretty cutthroat. It's all about shelf space. So these DSD partners will make sure that those games are not happening and that these shelves are actually staying stocked and that the company can, or that, consumers can actually find the product when they need it. The other big thing that's happening is these branded coolers. So Celsius announced on the last earnings call that they have 1,400 of these branded coolers that have already been ordered and are starting to get deployed into, some of the top retailer locations, as well as convenience stores, gas stations. And these branded coolers, obviously, not only do they look nice and bring some attention to the product, but it also means that the product is going to be cold all the time, right? So, grabbing the whole grab and go concept, you don't want to grab a Celsius, a warm one off the shelf, at the grocery store. You want a nice cold one. So branded coolers does a lot of things. It's not just the branding, but it's the fact that you can grab a cold Celsius. Because if you're looking for something cold and Celsius is on the shelf and then Red Bull and Monster are in the cooler, of course you're going to go grab a Red Bull or Monster because you want something cold. So this now kind of creates an even playing field for all of the big energy drinks. So between, you have 82,000 stores now set up to carry Celsius, 150 DSD partners, 1,400 branded coolers. So that's the story. And I think people are realizing that Celsius, it's not just a growth stock, it's also one of these reopening stocks, because as more foot traffic comes into retailers, as more of these retailers come online,
gyms too, I'd imagine, right?
Gyms
like a Bang type model.
Yep. And Celsius is still crushing it on Amazon. They're still like number 2 on Amazon for the entire energy drink category. They'd probably be number 1 if they weren't running out of supply. So, the way that it works is Celsius basically sells to Amazon. Amazon sets the pricing, this dynamic pricing that they do. So when you go to Amazon, you look for Celsius and the price is, $3 more per case than it was a week ago. It means that Amazon's running out of supply, so they can, bump up the price because it's all about, supply and demand for them.
Okay, so a couple takeaways from that. One, if you're really aggressive, maybe apply to Celsius and get in there, battle for us, get them in front of the Monster cases. Take Monster out of the refrigerator, put them in the back.
So as of yesterday, I actually have a call tomorrow, but is today or tomorrow to discuss it. But Celsius is actually going to be one of the sponsors for my stock contest.
Okay, tell us about the stock contest. You can't tease us with that and not give us the details of how we participate.
It's too late to get in now. I mean, so this is like this is the Q2 stock contest. You know, we did Q1. We announced those winners over the weekend. Ironically, the 3 people that won the Q1 stock contest all picked GameStop as one of their stocks.
All right, there we go. Could have guessed that.
The GameStop saga never ends. So all 3 people had GameStop. So Q2. So the submissions had to be in by March 31st because obviously Q2 starts on April 1st. We wanted to start, you know, on the right date for everybody. So if you go to I'm trying to think where someone can find it. Oh, if you go to our website, fintwitstockcontest.com, you can click on the leaderboard button and it'll take you to our Google Sheet with all 3,400 entries and then all 3 of their stock picks.
All right, and I'm going to make it easier for you guys. I'm putting it in the chat. I have it up now. You know what? We'll pull it onto the screen. You have the link in the chat down there.
Oh, perfect. Okay.
Boom. Look at that.
Yeah, and if you go to, so if you see the tabs at the bottom and you click on most popular, you can actually see which stocks got picked, you know, were the most common picks. I believe Tiger was number 1. There you
Tiger
go.
Brokers.
Bills.
Okay. So
it's some interesting kind of sentiment data. You know, what are the stocks that people are the most bullish on for the next 3 months? We set some requirements, like the stocks had to have a market cap over 50 million. Stocks couldn't be trading under $3 because we don't want everyone just to pick a bunch of penny stocks. That really doesn't add any value for anybody. So like we want like legitimate companies that people are actually picking, most likely companies that they actually own and follow.
Yeah. So when I was in college, I competed in like TD Ameritrade had like a college program for paper trading, and they hadn't done it before, so they hadn't really thought it through, and so there were no rules, literally no rules, and so we all, like in every university in the country, just did major YOLO option trading and like had 198,000% return. Or 0, right? It was one or the other. And it's like, yeah, that doesn't really make it a realistic game.
Right. So so we try to cut a lot of that out. You know, there's no crypto, you can't short stocks, you can't use ETFs, you can't use any leveraged products, no options. Because a lot of that stuff, it's just too hard for us to track. You know, we do it in Google Sheets because there's an actual Google Finance API that you can use to update all the prices. So you know, we're not trying to create. I mean, I'm not making any money on this. I'm actually putting money in. So we have $10,000 of prize money.
Hell yeah, that's awesome.
So I'm actually putting money in. I'm actually losing money on this. So I'm not looking to create any work for myself.
Yep, no kidding. All right, so there it is, guys. Check it out. I'll put the link in the chat one more time. And Jonah, I don't know what your timeline looks like. I know you're trying to listen to this panel. If you want to talk about another stock, let's do it. If you got to get back to the call, totally respect that.
So if I could pick a stock, I mean, you know, Upstart's one that some people are familiar with. They're a kind of an AI-powered underwriting company.
That's ticker UPST, guys. UPST. Somebody drop that in the chat to help your fellow chatters out.
So this stock kind of saved my portfolio in Q2. You know, I run a pretty aggressive growth portfolio, mostly small cap. So most of those names pulled back from late February through mid-March. But I think it's the second week of March, Upstart reported their Q4 numbers and raised their guidance on 2021 from about 360 million in revenue to 500 million in revenue. So a massive bump on guidance. And then they also announced an acquisition of a company called Prodigy that's going to help them get into the auto loan lending business. So, you know, in terms of AI, I know a lot of companies like to throw around AI, that they're applying it to, you know, this and that. But Upstart really, you know, they've been building their AI model for the last 8 or 9 years. And there's a lot of reasons to believe that it's a better way to do underwriting. It's faster, it's more effective, it's cheaper, non-biased, and you're using 1,600 data points on someone and their credit worthiness rather than just a stupid FICO score. So this company went into the stock was at $56 when they went into their Q4 earnings, and the stock was up 3x over the next 3
Holy crap.
Yeah,
all right, guys. Yeah, so this chart goes back to, let's see, December 15th. Is this did it just start trading in December?
Yep, that was
Okay,
their IPO.
Okay, so the IPO December 15th. So you're looking at a couple months here. You can see the time in this chart that Jonah's talking about. Holy crap.
I don't think I've ever had a top 3 position in my portfolio go 3x in 3 days. It was wild. And the thing, I was taking some profits along the way. Usually when your stock's up 100% in a day, you take some profits, you think it's going to pull back the next day, and then it's up like another 25% the next day. It was just insane. So huge run. A lot of people that owned Upstart, because I did a write-up on Upstart back in December for my Substack newsletter when the stock was under $40.
Yep. Okay.
So a lot of people that were on my newsletter list were in Upstart. Now, some of them, the stock basically went sideways for the first couple months of the year. It actually ran up from 40 to 100 and then pulled back all the way to under 50. And that's when a lot of people just bailed. So a lot of people didn't see that 3x move.
There we go.
But I'm still
that one
bullish.
deserves an air horns.
Yeah, I was doing some cartwheels when they announced. I mean, when they raised guidance, I figured the stock would be up nice the next day, but I never imagined 3x in 3 days. So that's another one.
Wait, just a couple questions on this one. So I mean, if they have a big IPO, it's a multi-billion-dollar company. I'm assuming that revenue is substantial. Is the biggest like basically headway that they have for revenue growth just getting some of these old school businesses and industries to say, hey, we're going to try something that's not the same way we've been doing it for decades?
Yeah, that's definitely part of it. They have the data now to prove that their model is way better than anything that banks would build themselves, which is literally just based off of FICO scores. So using Upstart's technology, banks are able to issue twice as many loans without seeing any increase on the default rate. So you're essentially doubling the revenue of the bank, without taking on any more risk. So
that's
that data
great.
alone, I think the sweet spot for them is going to be a lot of these smaller regional banks that don't have the resources to build anything this powerful. The Bank of America's, those big banks might, but there's thousands and thousands of these community banks and smaller regional banks, and that seems to be who Upstart is partnering with. The other thing is, their model is looking at the creditworthiness of an individual. So wherever any other credit verticals that use that same sort of data would also be potential verticals that Upstart can get into, which is why they're getting into auto loans now. And then at some point, they will most likely get into either mortgages or home equity loans, small business loans, because if anyone's ever taken out an SBA loan, it's based on the creditworthiness of the owner of the business. So small business loans backed by SBA could be a big market for them as well.
Absolutely. Yeah. And I love my favorite line that you just said was that they help the banks make more money. Because if they can do that, the banks aren't going to stop paying for it. I mean, it's going to be the lowest churn ever, right? They're not going to stop paying for something that is driving them revenue. So, all right, that's super interesting.
And then another one. So my most recent write-up, I won't get into too much detail on this one, but I did write about this last week in my Substack. A company called ClearPoint Neuro. So it's still a small cap company. Market cap's under 450 million. I actually learned about this company about a month and a half ago when a couple neurosurgeons actually DM'd me on Twitter and told me about what they're doing. So so my father had a brain aneurysm 20 years ago, and he needed brain surgery. It's like a 10-hour surgery. Wow. And it's everything they do is so inefficient because you have to keep taking all these MRI scans during the surgery and moving people back and forth. And what ClearPoint Neuro has done is created a real-time MRI imaging system, which is going to be great for minimally invasive brain surgery, DBS, which is deep brain stimulation, which they're using for Parkinson's. And then the third thing, which is really the big moneymaker down the road, is going to be drug delivery. So all of these, genomics and pharma biotech companies that are creating drugs that are in trial right now for different types of neurological diseases that have to be delivered to the brain, to very specific parts of the brain, ClearPoint Neuro is going to be the required delivery system for those drugs. And I believe there's over 100 drugs right now that are in trial that are all going to use ClearPoint. So as some of them come to market, these centers, these surgical centers, are going to be forced to go out and purchase ClearPoint if they want to be in that business. So those are a few stocks I'm still pretty bullish on.
Boom! I love it. You came on a crazy day for you, right? You canceled everything except for us because producer Aaron bugged you so much, which again was my bequest. I had one other update today that I wanted to give you from our last discussion, but the last thing I asked you when you graced us last time was how many times you can bench 225.
Yep.
I think your answer was like 25 or 30. I gave it a try at night. I got to 4.
Okay.
I got to 4. You keep coming back. Maybe I'll be up to 18. A couple weeks from now.
What's your goal?
So I tore a pec in college.
Okay. Yeah,
and I actually competed in powerlifting in college. And I tore a pec my sophomore year, and my bench was right around 300 at that time. So if I can work back up to a PR, even though it's years later, but with a torn pec, I'm all about it. So that's the goal.
I stop at 275. So what I do is I literally start at 135. I do 10 reps. Put a 10 on each side, another 10 reps, another 10. Because I just go up slowly. I want to warm up my muscles, so I don't want to start too heavy and end up overloading my body and tearing something, or doing some damage to my joints because they're not warmed up. So I'm past the days of trying to max out or impress anybody at the gym. I'm just trying to maintain what I have. So.
Yep. Yeah. I wish I'd warmed up on that day when I ripped a pec all the way off.
I've seen a few YouTube videos of someone literally tearing their pec in the middle of a chest workout, and you can like hear the snap. Like it's not a very nice sound.
Yeah, for me it was dumbbell bench, right? Because dumbbell bench you can get so deep.
Right.
Dumbbell. Whoa. Okay, it's gone.
Yeah. So, I don't do dumbbells for that reason anymore, because you can really stretch it out too far. So if you stick with chest, you're sort of limited as to how far you can come down.
Yep. Awesome, man. Jonah, thanks so much for coming on.
You want one more stock? Do we have time for one more stock?
I'll let you go as long as you want. Okay. I was just trying to be respectful to your time.
Yeah. So I posted about an hour ago on Twitter that I'm doing a podcast next Monday. Actually, I didn't announce the date, but it's going to be next Monday.
Boom, that's an exclusive. You didn't know the date. All right, keep going.
Yep, it's exclusive. So the Chit Chat Money podcast is going to have me, Asher Duluth, who's a founder of Mohawk, and Sean David, who runs Avery and Company, and they're one of the biggest institutional shareholders of Mohawk. So the three of us are going to go on to the podcast, and we're going to talk about Mohawk for about 60 to 90 minutes and why we're really bullish on the company, what their AMI system actually does. AI.
Are you talking to your MHK?
Yeah, MWK.
Oh, MWK. Thank you. MWK. There it is.
Yep. So stock got up to about 48 a couple months ago, pulled back. It's now under 30. They just had a special meeting last week to issue some new shares to close some deals, and then give the company some extra shares if they want to go out and keep doing more M&A. So we're going to spend, an hour next Monday talking about the company and why we're so bullish. I think the stock has a shot to get to 100 by the end of next year, just based on, revenue expectations, some M&A deals that are in the pipeline. So the company already guided this year to $360 million in revenue, which is a 100% increase over last year. The stock's trading at less than 3 times sales, and they have $500 million of potential deals in the pipeline, most of which should be accretive. So what they do is they use their AMI system, their AI-powered system, to identify for 2 main things: to identify trends and market opportunities on Amazon where demand is not being met, either by products that, typically by inferior products with low reviews, high return rates, and that's where Mohawk will work with their supply chain partners in Asia to, quickly develop a higher quality product for that category.
So
And then-
Mohawk is actually selling they're not selling the software to help other brands do this. They're using their software to actually sell the products. Is that right?
So they do say that their software is, for sale for other companies. I just don't think it's a big part of the story.
Okay.
I think it's mainly for proprietary use only. I don't really know how many companies are actually using it. I haven't seen any hard numbers, but I do think it gives them a competitive advantage for now. So I'd almost rather they just keep it as a proprietary product as they grow. I just don't think it's worth, essentially renting out Amy to anybody that wants it. The big company that they're going to be competing against at some point is a company called Thrasio. So Thrasio just raised, I forget how much money they just raised, but they just raised money at about 6 times sales valuation. And like I said, Mohawk's trading at about under 3 times sales. So I do think that we're going to see that Thrasio IPO in the next 12 months, which will make Mohawk look even cheaper. But Mohawk is using Amy for those 2 things. So they're using it to identify opportunities on Amazon, to launch their own products into a category. They're also using Amy to identify other e-commerce brands that they might want to acquire. So they're going after smaller e-commerce brands that already have a strong presence on Amazon with not a lot of SKUs, but at least strong SKUs with strong ratings and reviews. And then they're typically buying those companies for 3 to 4 times EBIT. And then they're chopping off as many of the fixed expenses as they can, getting rid of people, getting rid of excess marketing, getting rid of office space, like all of the crap they don't need because there's just overlap. And then a lot of those revenues are dropping down to the bottom line. So those deals are becoming very accretive over time.
Awesome. And so let me just try to summarize and understand the company. So basically they use the data analytics platform that they have to identify basically gaps in products which exist on Amazon or are getting progressively more popular. They then have the system set up to go ahead and build, manufacture, somehow be able to sell these products. And that's how they win and they drive revenue.
Correct. Yep.
Okay. That's a super interesting model.
Yeah, it's basically an AI powered CPG company. That's kind of
pretty sweet.
And so half of the story is launching their own products and growing them organically, and then the other half of the story is doing these accretive M&A deals.
Okay.
And if they do, like I said, if they do 360 million this year, which is guidance, about 31 million in EBITDA, which is guidance. The stock's trading at 30 times EBIT or EBITDA with 100% year-over-year growth. So, I think valuation's really, really fair right now. And if someone's looking to be involved in e-commerce in the small cap arena, I just think this is a nice ancillary way to play it.
Awesome. And I like that IPO story too. I've got a stock that I'm holding into solely for that Coinbase IPO. I would have probably dumped it before now, but we've got that coming up in a couple of weeks. So I love those. What'd you say?
You talking Voyager?
You know that stock?
Yeah. I mean, I do follow it a little bit, and I've had a lot of people DM me over the last week or two about the stock, and that's part of that's one of the potential catalysts. Is once we see the $100 billion Coinbase IPO, it's going to make Voyager look cheap.
Dude, all right. Send them my way. I'm like the analyst of record in this stock. But there's not really any analyst coverage. So
Right.
I go through all the numbers and try to basically back into revenue forecasts. But they just put out a press release this morning, which I didn't even talk about yet. But basically they beat my expectation for new funded accounts. You've got that going for it. Plus you have that Coinbase IPO. So yes, you nailed it. I'm surprised nobody knows the stock.
So is Voyager just a smaller version of Coinbase for basically, digital assets, crypto trading?
Okay, so more or less. So there's a couple ways where it's distinctly different, and now you're going to see me nerd out for a second.
Right.
But basically, rather than it being a crypto exchange, it's a crypto brokerage. So they connect to over a dozen exchanges. Their competitive advantage is that then they can fill transactions at whatever the cheapest price is across exchanges, right? So you might see Bitcoin quoted at 59,000 on one place, 59,100 at another place. They give their customers that best price, sort of like a stockbroker now. Like they're sort of futuristic on that front. And the way that they make money is they will quote you a price if they can fill your order for cheaper than what they presented, they take part of that revenue. So a lot of the issues with like people bitch about like a Coinbase is they say it's really expensive to trade on Coinbase. They're commission free. If they quote you 59,000, they fill it for 58,900. They're going to take $50 out of that transaction. So you never are giving up that sort of fee, etc. They also pay interest on 50 coins, which is more than any other one place pays interest on. So it's got a lot of really good things going for it. And we're talking about a stock that had revenue of $3.5 million in Q4. And my estimate was that they were going to put up $55 million in Q1. Based on the numbers today, I haven't updated the model yet, but based on the numbers today, I mean, they're probably going to be 65 million or so in Q1, 60, 65. So it's really compelling.
I don't really follow Coinbase just because I know the valuation on the IPO is going to be so big. It's going to be way out of my kind of focus.
Yes.
Like, caps and mid caps. But what is Coinbase going to come public at? Like, do you have any idea what their revenue run rate is?
So they're it's the rumor right now is that Coinbase is going to come out at 60 to 100 times revenue.
Jesus.
Dude. So this stock, right? This Voyager, right? My average price in the thing is 52 cents. So like I have no reason that I need to hold it. Okay. But when I've got Coinbase in 2 weeks coming out at 60 to 100 times revenue, and then we've got this stock that grew revenue from 3.5 million to 60 million in 1 quarter. And they're trading at 10, 12 times sales. I'm going to hold on to this all day.
Wow.
So that's basically my thesis for staying in the stock.
Right. So I do like those sets of those valuation catalysts. That's one reason I like Mohawk when we see the Thrasio. And if Thrasio just raised money in the private markets at 6 times sales, right, there's a good chance when they come public, they're going to, they'll get even a higher valuation or a higher multiple.
You get that liquidity bump.
Absolutely. Another one that I'm looking at is when Robinhood IPO comes down, or we see the S1 with all the numbers, that's going to make stocks like Futu and Tiger look much cheaper. So
and then we have eToro as well.
Right.
That's a SPAC deal. It's a pre-merger SPAC. I don't remember the ticker off the top of my head.
Yeah.
But under the radar.
I saw 10 billion valuation, I think, and I kind of got scared off. But
yeah, the thing that they have going for them is that they do crypto and stocks, right? Not in the U.S. but globally. Right. And so they're one of few solutions for that, right? I can't go in my Interactive Brokers account right now and buy Bitcoin.
Are they coming to the U.S.?
And then yes, so they have Forex and crypto in the U.S. Okay. Stocks we don't have a timeline on stocks. They said it is, but it's sort of out of their hands, right? It's the U.S. is a nightmare regulatorily. So they've got to get that approved. But yes, that's sort of the big thing.
I mean, they're going to come to the U.S. and they're going to compete with, 10, 12, 15 very established companies. And I don't know what their edge is. Maybe just the edge is the fact that they can do stocks and crypto, and some places don't. I use Interactive Brokers as well, and I'm pretty sure crypto is not on there yet.
Yep. Yeah. Their big selling point, and I don't know if they're going to be able to do this for stocks in the U.S. I think that's yet to be determined. But their big selling point out in Europe is the social aspect. That they've got like a ton of social sharing. You can follow other people's portfolios, etc.
Okay. Cool. So, okay, I'm going to get back to this FDA presentation.
All right, sir. Thank you so much for hopping on. I appreciate us being the one thing on your radar. And guys, I'm going to drop the link to Jonah's Twitter in the chat here. You got everything. Look at his description. There's a ton of links in there. Great content. Make sure you follow along and hang out with him.
Thanks, guys. Appreciate it. Talk to you soon.
All righty. Talk soon. Okay, everybody. Next thing's next. Wow. Time flies when you're having fun and talking about Voyager Digital. I saw somebody in the chat drop in. Here comes Luke's daily Voyager Digital rant. Okay, yes, that is something that happens. But we're running behind the schedule now. So let's get rolling. Let's keep it clipping, guys. We've got our next guest hanging out in the background for us. I think Mr. Jason Raznick might be making a guest appearance at some point today too. But all right, guys, let's go ahead, roll the video, bring our next guest on. I need some water after pitching that stock, and we'll keep clipping. Mike, what's up, man? Welcome to the Power Hour. How are you doing, sir?
I'm doing well. How are you?
Doing well. Anything especially exciting in your world? You've got a great background there. We got the bull, we got the bookcase, you got everything going on.
Yeah, now that's special. That's my standard background now.
Okay, I like it. And Jason Raznick joining us as well.
What's up? We got Mike here. Luke, are you heading out to
Yep,
your?
I'm Yep. I'm gonna go build on the business a little bit. Stay in touch, guys. Happy trading.
Luke, they never put the charts behind you like they said they were going to. What happened to Rohan? I don't know.
Well, if it makes you feel better.
That's coming tomorrow, Jason.
Yeah.
Why are they zooming in on you? I have to move that off now. Okay. All right, Luke, get out of here. I'll talk to Mike. I'll see you when I see you.
All right. Peace out, guys. Happy trading.
Peace out. All right, Mike. Where do I find you today?
San Francisco.
Oh, how do you like it out there these days?
Yeah, a little foggy, a little dirty, but not too bad overall.
Yeah, I hear it. Even working from home?
Yeah, primarily. I think everybody is out here. It's one of the few places I think that's dedicated itself to trying to not go back to the office. So
Got it.
We'll see what happens.
Got it. So what are you up to? So what's new in your world? And then that's
Yeah, so look, we're I think today we're going to talk about Learns, LRNZ, which is our AI deep learning and tech ETF.
Yes.
Which has been, let's say, of interest in the past 12 to 15 months here. So, we did want to talk about sort of what's going on with the rotation from growth stocks to value stocks and why that could be, a buying opportunity in tech.
Yeah, but for this Learns, LRNZ. Aaron? Can you put that in the? Can you put it on the screen so we can first show it up on here? And you guys know these True Mark Investments. You guys can Google it. See what you want to hear about it. But they have ETFs, cloud migration, software as a service, cybersecurity, artificial intelligence, and all the different stuff. So customer demand is crazy with work from home right now. Crazy with work from home. So how does that affect your thinking when you're building this ETF, when you're trading the ETF? How does that change things? Like how do you guys look at this on a daily basis with this work from home trend?
Yeah, look, so we take a very broad view of it, right? We believe tech has a winner take all result. So even when you look at work from home, these are trends that accelerated long before lockdown, long before the pandemic. They came into the spotlight because of the pandemic, and certainly they've accelerated through the pandemic. But the idea that they're going away anytime soon is ridiculous in our minds. And, you see some of the valuations getting squeezed during this rotation. But the way we approach it is we look for companies that utilize artificial intelligence as a competitive advantage. Now, these companies are going to be in hyper growth areas, and these hyper growth areas tend to be new tech segments. So when you look at SaaS, when you look at cloud migration, you look at how AI is being used in biotech these days, these are all new approaches to fairly new problems, or at least issues that are increasing in importance. So when you look at that, you've got to identify which one or two or three of these companies is going to be the lead in that tech segment, and then eventually which one of these companies is going to be the category killer, and which company is going to end up being that household name. In essence, because we run a pretty concentrated portfolio, we're active investors. I know this sounds goofy 10 years later, but look, 20 years ago, one of these companies is a FANG stock, right? I mean, when you talk about the FANG stocks where they were back in the first, .com, they eventually become household names, category killers. They eventually, carry the market for 10 years running in terms of where most of the growth has come from. So our job is to go try and find those in new tech segments and try and own who's going to be potentially that category killer and eventually become that household name. I think you're on mute there, Jason. I can't hear you.
I was tricking you just to make sure. I was trying to see how good you're at reading lips. But how do you discern when you're looking at these investments to add to LRNZ? If you guys don't have it up, LRNZ, L's and Lisa, R is in Raz, and is in Nancy, Z and Zebra. How do you guys discern, is it buying the Twilio or is it buying CloudStrike? How do you guys look at allocations? And you talked about, buying in the dip and in the future, what could hold. How do you guys discern? How do you guys put their portfolio allocation? I know Kathy Wood explained a little bit to me her process for it. What is your process for it?
Well, we're a little more concentrated than Kathy's funds, right? So we're one in, one out. right? So you'll start with an allocation. When the portfolio launched, they were equal allocations, okay? And we'll let them ebb and flow. But if we like an idea, we're getting rid of an idea. So we generally run sort of 20 to 23 names in this portfolio, and we have to like it enough to replace one that has lost its luster in our eyes. But what we're trying to do here is, if we come in with an equal weighting, they're going to stretch out and run. The winners are going to run, and our job is to identify those winners as they separate, consolidate into them by getting rid of the losers in that category. So say we start out with 2 or 3. Take CrowdStrike and Zscaler, for example, right? CrowdStrike and Zscaler, same business. They come at it from 2 different angles. One's core and one's perimeter in terms of cybersecurity. And eventually, you would imagine one of those to become the category killer. They may both. I mean, they're starting to integrate their product now for ease of use amongst customers. But we own both. And if one starts to separate from the other, and the other, we see there's a decided category winner, we'll unload the loser, or the loser is going to get bought out or absorbed or whatever it may happen, and we'll consolidate into that winner for that segment. So across segments, that can happen multiple times.
Are you spending time talking to, company management, doing listening to road shows, a lot of that? I know that's in the mutual fund space. There are a lot of times listening to company management. Are you guys doing a lot of that, or how does that go about?
We're a little different than the mutual fund space in that sense. We start tracking these companies pre-IPO, and our PM on this fund realistically starts to watch these in their B and C round of funding. So we're keeping an eye on these, and there's a lot of, because you start watching these pre-IPO, it's a bit less about conversations with management. It's a bit more about qualitative assessment. What's their customer adoption? What's that ecosystem building up around the technology? Because with tech, once that ecosystem builds up within a company around a certain technology they've chosen, the switching cost is really prohibitive. And so identifying who's gaining that popularity, who's gaining that momentum pre-IPO, understanding that qualitative assessment through IPO to the point where you're watching obviously their quarterly numbers and understanding where their projections and growth numbers are, then it becomes a big deal. But we start way back before they go public. So a lot of our holdings, will get into them not long after their IPO.
Got it. Okay. So you're in for the long haul then.
Yeah, unless something gives. For us, when you look at the hyper growth phases of a tech stock, this is a natural chasm for us. What's happening right now. I know we've all been accustomed to watching the market for 10 years going, hey, everything just keeps going up, but it doesn't. It takes a break on the growth cycle. And, for us, when you see a hyper growth cycle, you'll see these chasms. It's like a slinky effect. Valuations might get stretched. Could be a market environment that causes people to rotate out, but they'll continue with their accelerated earnings and their beats and their projections. And through that, they'll catch up to their valuation extends again. So it's important to identify when those pauses in the growth cycle occur, and whether or not they are a permanent thing or a temporary thing. And so we'll watch it from that perspective and take advantage of what we see as a temporary pause in the market's acceptance of their growth cycle. The numbers never change. People just they stop. They look at the valuation and give it priority over the numbers or whatever, and we have to identify that as an opportunity to consolidate.
Got it. So one of the things that the work from home phase with the vaccine coming out, people are getting back to the office a little more. How do you think that'll play a role, Mike, in these stocks that you own for the ETF LRNZ?
Yeah, I don't think it touches them. And maybe we're taking a pretty pragmatic viewpoint of that, but here in San Francisco, one of the biggest employers in town is Salesforce, and Salesforce already announced that 65% of their workforce is never coming back to the office. So what does come back to the office really mean anymore? And even in our business, when you look at what's happening in the ETF world and distribution of ETFs, so much of this has become on demand and digital rather than old school T&E, boots on the ground. So I think the demand for these services only increases. The work from home trade, as they started to call it in the pandemic, was never a trade at all. It was a trend. And, that trend started long before the pandemic. It's going to be here long after the pandemic. people like to research their stocks now 24/7. They like to see things. They like to look at a content piece at 10 o'clock on a Friday night, not a webinar at 1:15 in the afternoon on a Wednesday anymore. So there's a combination of both across all industries. Mission critical folks will come back to the office. And here's what happens. Mission critical folks come back to the office, others don't. That actually increases the need for some of these work from home technologies, because now you've got sensitive information, you've got different coordination happening between people on site and people off site. And so we see it accelerating. We do. And I think as we get through the next few earnings reports, people are going to recognize that as well. I mean, regardless of what the pandemic's doing, what the vaccines are doing, there's going to be still a high demand and evolving demand for different technologies that are used in the digital migration. I'm reading lips again, Jason.
Yep, they're reading lips, Rohan. See,
right, you're back. You're back.
I'm back. Well,
I'm getting better at it, though. I think I'm getting better at it.
Well, they gave me a new mic, so that's why I said, "Look, I got a whole equipment thing here. They got me like this whole arm thing. It's like a whole
that is a giant mic.
It's a giant mic. My mic should be like the best mic in the world right now. It's Joe Rogan times 10x. But Mike, I want to just take us back. I don't know how much time we have, but I want to take back for like a minute or two about how you guys came about to start this ETF, or TrueMark. How long did it take you guys to start it? What you're doing, this ETF is like everyone's going crazy. My sound is way better in the chat. They're going crazy. See, so that's good. That's a good thing. So how did it happen? How does Mike start this ETF and make such a sweet ETF? Because it's like my kind of stocks. I like the thing behind the things that power other things, and that's what this ETF does. And so, how long did it take you to start it? And just a little bit, take us back when you were in that room thinking about starting an ETF. Tell us more. Tell us more.
Yeah, well, fundamentally, it started with the idea that we believe in active management. We believe in active management concentrated where available. And so the first step is identify places where active concentrated management makes sense, where it's fertile ground. And, tech happens to be one of those places. The second step is turn it over to the smart guys. So we've got a basket of ETFs. We have an ESG ETF, an AI ETF. We have structured outcome, which is like buffered, S&P exposure. So we've got ETFs across the board. We have a dividend equity income, low vol equity income ETF now, DivZ. So for me, it's a matter of identifying where active concentrated management is encountering fertile ground. And then it's identifying someone that is industry specific and really credible in that industry to run that fund. And with Learns, we've got Sam Kim of Black Hill Capital out here in San Francisco. We think he's a tremendous manager and well connected, not only from a hands-on standpoint, but from a private equity standpoint, who can identify these companies coming down the pipeline and understand from a practical sense which ones are going to make it in reality. So it's identify the space or the segment, identify someone that is credible from an investment and an industry background that can effectively run that strategy within that space, and then get it out there into what we hope is the tailwind of market demand in that space. So for something like Learns, we checked all three of those boxes. We've got a great manager on it. We think it's a space that was ripe for active concentrated management. It's certainly proven out for someone like Kathy Wood over the years, but we're not story stock investors, and that's a little bit different. So we are definitely investing in accelerating fundamentals, what we think are secular growth stocks within story themes, within story sectors or story segments. But as you mentioned, we're looking for those companies that have that competitive advantage that's going to play out over time very consistently as they grow. And so for us, those are secular growth stories that survive any rotation, any economic impact. But it really starts with identifying that segment, identifying someone that has got the chops to run the strategy in that segment, and then sticking with your strategy and your mission with that fund.
Got it. And so have you been before, I mean, you've been in the investment space for how many years, I guess? 25-ish. Okay. So before this era that we're in, what were you doing in the .com era? Like, what was it like for you in the 2000s? That's what I would like to know.
I'll tell you, in the .com era, 98, I was doing institutional equity sales for CIBC Oppenheimer out of Boston at the time, right? And Blodgett was he was the tech analyst for Oppenheimer at the time. So I was on the research call where he put that, the $400 target on
Amazon.
Yeah. And we all fell off our chairs and looked at each other and said, it's on. Like, so this is going to get wild. And so, I was in the heart of it from that standpoint. And then in 99 came out to Silicon Valley. So, I watched it firsthand. I mean, I was in the middle of it, working out of Palo Alto with an investment firm. And I was there at the height.
Which one?
We started a call writing mutual fund called Kelmore Investments.
Okay.
Raised a few billion back in 99. And with call writing, sometimes it doesn't work out when the market does certain things. So that gig was kind of over by 06. But we watched the rise and fall, right? We saw all the companies with the story stocks with zero earnings, nothing but an idea and a plan, go ballistic. And then I was also there, to listen to the IRS running ads on the radio at the time, trying to get people to come in and negotiate their tax bills down because they had all had exercised their stock options. Company, held on to the stock, didn't liquidate anything to pay the tax bill that would come at the end of the year, and figured they would, just keep riding the stocks up. Stocks plummeted, they collapsed, and everybody still owed a tax bill on a stock that was worthless. So, I've seen it all in the tech space in the past 20 plus years, as has Sam Kim, who manages the fund. Sam's he's an MIT, master's double engineering degree from BU, who worked in the defense space for some time on different systems, but was in the investment side of things, running up for the last 20 plus years. So we've all seen, different iterations of this. And that's not to say I think, .com one is going to happen, but it is to say that, we those that have lived through that, we tend to err towards stories that have some fundamentals behind them, some accelerating earnings, and not just a great story. The combination of the two is fantastic. Don't get me wrong, but if we had to choose between the two, we're a little bit longer term than just a story stock. We like to look at the accelerating fundamentals.
Yeah. I echoed there. Okay. I don't know why I'm echoing, but I am. Do you hear me echoing?
It doesn't echo on my side.
All right, then beautiful. So now it's good. So I hear you. I mean, just from inquiries into buying our company, Benzinga, now we have real revenue, real earnings, but it's just like the money seems like it's flowing in a big way in the markets right now. And I know you've been in this space, and I was in this space in maybe a couple of years after you, but 2000, I learned my lesson when I was buying those .coms. And they would go up and go up. And there's a company called Rare Medium. The symbol is RRRR, 4 R's. I don't know. Do you remember that one?
Vaguely. I know the name.
You should. Yeah, you shouldn't really remember it, but it was like one of these like digital web design companies. One of my friends was at it. I bought it at 48, went to 78, bought another 100 shares. So I was just finishing college. It's kind of expensive. It went down to 0. All right. But the moral of the story, is if I would have just held all those stocks and never sold any of those stocks way back when, that account that was 50,000 that went down to like 0 or 4,000, if I would have just held the last stock that I sold, which I'll tell you in 1 second, was Amazon. I sold it at $10. So it was $7.80 with $2 commissions per share at the time. That would have been worth, that 4,000 would be worth 1.8 million. So, or 2.4 million. So in essence, like they say, I guess, hold forever.
Well, I mean, I tell you, one of my favorite stories was back in, I think it was like, that'd have been 02. No, somewhere in there. Yeah, it's like 02, I think, maybe a little later than that. Apple was $20. There was no iPhone. There was nothing was there. $20. Split adjusted. I was in it at 10, and whittled it down along the way. But the reality is, you're right. I mean, but don't kick yourself, because I don't think I don't think everybody thought selling books online was going to become what Amazon is today. So,
Well, yeah, I mean, I kicked myself because I had an online textbook thing, and I wanted to be the next Amazon, and I didn't sell to Borders way back on. Anyway, it's all good. But yeah, Apple, I bought when that iMac came out. When the iMac came out, that translucent computer, I bought it, and I didn't buy more shares as the iPod came out, so I had a small amount. I still have, but yeah, I guess you can't kill yourself. But so this ETF, are you guys going to launch like a space ETF? That's a like I have like 7 questions, but we'll just ask 1 or 2. Do you guys are going to do like a space ETF too, or is this not up your alley?
And I don't see it. I mean, more power to them on the space ETF, but it's a lot like when the first blockchain ETFs came out, and I'm looking at it and go, well, it's not blockchain; it's just people that might benefit from blockchain.
Okay.
So I mean, space. I've read sort of the justifications on some of the space ETFs and the names in them, and I can get there. I mean, I can get there in that logic, but that's not our expertise. It's if it becomes an area, and look, we want to be able to jump, especially with learns, right? We jump across segments, and we've got biotech in that fund. We've got cybersecurity in that fund. So in today's sort of relative jargon, it's almost a generalist, like an AI generalist.
Yep.
So if names start to make sense in that portfolio that are benefiting from space revenue, and we see a hyper growth cycle there, we'll look at it. I don't know if we're going to launch an ETF just to focus on it. I don't know if there's enough there to do that. The way we run money. So it has to be, again, that's box number 2, right? It has to be a segment that's robust enough that we can put together a concentrated active portfolio that makes sense. Because we're not going to go out there and do some sort of a passive index in one of these segments. It's just not how we function. So never say never, but I think space revenue from space companies, it's probably going to broaden out a bit more for us to really look at it. And in the short term, with something that uses AI and has a distinct advantage out there, end up in learns, it could. But the reality is we're not going to focus an entire fund on it anytime soon, I don't think.
Okay. And you have a great manager running this fund. You guys, if you don't know learns, look it up. Go into Benzinga Pro, look it up, buy it on your brokerage account, E-Trade, Ameritrade. Take a look at it. LRNZ. If it's something you don't want to watch daily, they have a good manager on it. And this is what Mike does since 1998. So he's on the line for it, and he's at work in San Francisco. He's not in Puerto Rico like one of us was last week, which is me. They thought I got fired from Benzinga for the week. I usually, when I'm on vacation, I usually go on the show, but this time I didn't. I don't know.
Were you scouting for a tax break down there? What were you doing? Vacationing?
Both, mister. Both. I have a call at 2:45 to hopefully finalize something.
Right.
I was supposed to go there. I was supposed to go there in August last year, and then I did not, and whatever. And I went. Do you have some friends in Dorado or whatever? Do you have friends out there?
I know quite a few managers that have relocated.
I went to Peter Schiff's house on Sunday right before I left for the airport, and seeing that lifestyle. We can talk later. I've done all the research and more because I've married, have 3 kids. It's not as easy as just but that's I know. Well, you know what they say, stay single and hear it jingle, the money. That's so but man, Mike, thank you for coming on. When you have new stuff to announce or anything, come on the show. We'll do a big we'll get articles out there. I don't know if you know this, Benzinga's news is distributed to, like I said, every major brokerage from Robinhood to Ameritrade to Webull, whatever. So
you guys do a great job.
Yeah, I mean, it's a weird name, interesting name. It's supposed to be Raz Report, my last name. It's a long story. And then it just came about, and we started off as a small cap. There was no agnostic news service on small cap stocks. That's how it started. And then when brokerage industry changed, they didn't want to pay big stipends to Reuters. Then we came in, and that's sort of you know how life is. So I don't know, but you know where to find me, I guess, if you ever want to chat about other things. Thank you for coming on. Research, guys. Look up LRNZ, and next time he comes on the show, we'll have questions prepared. from the user base. We'll do like it's called an AMA. Like we'll have the audience will come up with the questions. It won't be me because there's a bunch more that I received that aren't in the chat that they want to ask about this stuff. But I want you kind of see them so you can prepare to answer.
Yeah, I would love to do that. Sounds great.
Let's do that. Like a little AMA, ask you anything. It stands for some Reddit thing. All right, Mike, thanks for coming on. We will talk to you soon. Have a good one.
Thank you.
Yep.
You too. Appreciate it.
Yep. Appreciate it. Okay, guys. So it's Mike Lucas from, LRNZ. I've talked about it. It's AI, it's security, it's the cloud stuff. It's the thing I talk about, the thing behind the thing. You guys know how I talk about that stuff. And then I'm
here, Raz. What's up?
Spencer, I got to do something. I told the guys I would do something.
Yeah.
I know. Thank you for coming here. I know you have another, you don't have to cover for me yet. I know there's another guest and I see them in the waiting room, but could I do my thing first? And
Yeah.
okay if the guests
do your thing. I thought you had a hot, but
No, I don't. I mean, I was going to, and then Luke said I don't necessarily need to.
Okay.
So maybe I'll do a little earlier, but I was going to do this trade live on the show, but we only have 815 likes. I said we had to get to 850. Are you telling me out of the 500 or 600 people here, we can't get another 35 likes? Because I'm going to drop 25,000 on one stock. I don't know how long I'll own it for, but that's a big trade for me on this account. So if we get to 850, I will make that trade. And we'll see. We're at 825.
are you gonna like share a screen or
yeah,
what?
I'm gonna share it, but I don't want to share it until I see us at 850, man. That's
all right. Well, in the meantime, we do have we do have Christian Young in the waiting room, who is the from Clubhouse Media Group. Not the Clubhouse.
I know. So let's do Christian first then. Let's do Christian first because I'm familiar. Let's bring him on, Spencer. All right, hold on. I gotta do my thing, Spencer, for that. You know what I gotta do, right, Spencer?
Yeah, you gotta do your
Yep. All right, Spencer and Christian Young. Okay, Spencer's going to go off for a minute. Christian Young, Clubhouse Media Group. Hey, how are you?
Good.
And I know this is not, you guys, not to confuse us with Clubhouse Media Group. I know what it is. I know the synergies. But explain it to the audience.
Yeah, so we are a series of content houses. Consider us almost like the Soho House for influencers. They come and collaborate. And in exchange, they provide us free deliverables and content, which we use to market against and we sell against. So we're probably like the first series of content houses, really. We have an intellectual property arm, and we also have a venture arm. So we will go and acquire companies that our influencers promote and also own with us.
Got it. Okay. And so how long ago did you guys start this?
Yeah, so we started this thing about a year ago as a private company. We took it public back in November, and we're well on our way now.
Okay, and wait, go ahead, Spencer. Go ahead.
Oh, but just to be clear, the company is more than a year old.
Sorry,
the company is more than a year old, though, right?
Yeah, it's more than a year old now.
Yeah. But only in the last few months has there been this weird sort of confusion. Maybe you can sort of walk us through like your life in what was it, February or March, whenever, or January maybe, when the other Clubhouse started to get big. Can you walk us through that?
Yeah, so it's been interesting for us because last year we were sort of the Clubhouse, and then of course I had known, coming from a venture background, I had already known about the Clubhouse app, the live streaming app for audio, social media. We knew it was going to be rolled out this year. I actually was invited on by some of the members of the A16Z team to go on the app. I went on and spent some time just to try to figure it out. It's my job to try to figure out what the new technologies are out there for the company and whether we're going to use them with our influencers. So I don't know where the confusion happened, but I guess Elon Musk tweeted our handle, and I think there was confusion because there was so much of a news storm around the Clubhouse app that people bought our stock, I think, thinking it was Clubhouse Media Group. I remember that day pretty clearly. I was up pretty early, calling everyone, including talking to the Andreessen team, just to make sure that there was, there was no confusion that was intentional on our part or on anyone's part, and we actually issued a press release that day just because we obviously don't want investors being misled.
Got it. So on that front, why? I mean, so you're right now. I mean, I'm looking at the company. Okay, it's up 10% today. How long has it been public for?
It's been public for, I believe, 4 months or so.
Was it okay?
It was an RTO transaction.
It was an RTO. Okay.
Yeah. So
which is a reverse takeover.
Reverse takeover. Yeah. I think our kind of we've quoted ourselves as internally as saying we're like almost like a reverse SPAC in a way, because we are sort of a not a full investment vehicle because we do majority ownership, but we basically go and look for companies in the social media space that we think are interesting to acquire or to take equity stake in. And so in that sense, we're kind of like how a SPAC would operate, in which we identify assets to look at, but specifically in social media.
Okay, so you're looking for social media stars to take like assets, take a percentage in them or something like that. Is that kind of?
Yeah, like a good example would like be the Paul brothers. They did really well. They developed a lot of brands. They've developed a lot of intellectual property, and they've been able to monetize it. It's not just beyond. It's beyond just getting what they call a brand deal, where you're paid to advertise for something. I'm sure you've seen it. There's memes all over the internet of of influencer models promoting laxative tea, but I think if you go beyond that, and if people, I think the public's starting to understand that you can go and create products and brands around influencers, or we call them creators really, because they're creating something from nothing. And
were you doing that before you started Clubhouse Media Group?
Yeah, I was
brands?
actually.
Yeah, we tell us more about your background on that front.
Yeah, so prior to this, I actually was a creator. I had seeded a travel blog with my previous company. I had sold to a public company as well. Had a few years off and actually entered the travel space. So I was in the travel and food and gear review space. I built a YouTube following, nothing massive, but around 100,000 followers, was verified as a YouTube creator, verified as an Instagram creator, and then had a blog with about 80,000 followers, that monthly subscribers that read my reviews. I had an older demographic than what you would traditionally think an influencer has. I had sort of millennials and a lot of baby boomers as my followers, who wanted to sort of look at the lifestyle. So that's kind of how I got in the space. I started collaborating with some other people. One of them became very large, Daisy Keach. She asked me to be her manager and her attorney. And so I helped her with building her business. And that kind of led me into where we are now.
Got it. Now, do you know my friend who knows a lot of people in the social media world, Michael Gruen?
I do know Michael Gruen.
You just okay, got it. Another one of the people in the networks.
Very talented guy. We actually sat down a little over a year ago, and I kind of told him our business model. I think he's also done something very similar with his talent, and I think he's it's nice and refreshing to see other people in the industry doing what I think is a disruption in the space, I would say, and Gruen does a good job of it. So.
Yep. Yeah. It's funny. Back in college, I tried to start something where I took a percentage of, like, give someone $200,000, you get 10% of their earnings for the next 15 years. Do it for medical students because they're max out their debt structure. But to what you're doing, I don't know if have you seen this thing going crazy lately? I don't know if it's totally legit, but BitClout, where you can, have you seen it?
I am familiar with BitClout. I'm actually on it. So if anyone wants to, buy it, we also are putting our companies on there, our houses, I should say. BitClout's very interesting. It's basically like a betting platform or a trading platform. Huh?
Yeah. So if I buy Christian Young BitClout, what happens? Do you get any of that money?
Yeah, you can. You get a creator percentage. You get to set that at the beginning. It's really just tokenizing people and betting on whether or not they're going to have more clout in the future. So I think we're going to see a lot of these plays. Anything that uses blockchain technology. NFTs are really popular this year, as you know. Last year was crypto. Actually, I would say a few years ago was crypto. But blockchain technology in general is just great. And we actually signed on today as an advisor to the board, a partner at Andreessen Horowitz. They're also an investor in the Clubhouse app. So Andrew Mori is one of our strategic advisors now. So he's helping us sort of navigate the space because they have a lot of knowledge in blockchain technology.
So Andrew, you said, is helping you on this with your Andrew Mori is helping you guys with Clubhouse Media.
Yeah, he is.
Okay, and so what does that mean for Andreessen Horowitz? So he's at Andreessen Horowitz as well, and he's helping you. Okay.
So he's at Andreessen Horowitz. It is not an official partnership with Andreessen itself, but it is with Andrew Mori, who's a partner, and he's an investor that holds carry in many companies over there. So he's taken an advisory role for a company because we really do want to be at the forefront of everything we do in technology, and we believe, the more advisors we have from the venture space, and because I'm from the venture space as well, I think it'll make us a stronger team and a stronger company.
Got it. So a couple questions on the RTO. Did you like doing that reverse takeover thing? I'm actually asking out of curiosity because so we've been approached by several different things. Our company does nice 8 digits of revenue and fairly profitable.
Mm-hmm.
And we've had SPACs reach out to us, and I didn't want to go SPAC route because it's 4 or 6 months. Another company who has a NASDAQ listed security that's not doing much right now, they want to get rid of the NASDAQ security and then convert it into Benzinga. So the symbol would be like Zing or whatever.
Yeah.
And so in essence, it's a reverse, whatever. And
it's an RTO. Yeah.
It's an RTO. And I'm not really exploring it in a heavy way. And people are probably asking, why are they talking about this private stuff? But this is just a general question though. So why do you not like that? Or were you involved with the company when you did the RTO?
Yeah, I was with the company when it was private, and so I actually was heavily involved in the RTO in identifying the target for the RTO transaction.
How do you know how to do that? How do you know how to go find the target for RTO transaction?
Yeah, so this is my second RTO I've done. So I've gone through this process in the past, and so I'm familiar with it. Ultimately, it's identifying a target that is what they call clean. You do a litigation check, you do, outstanding debt check. There's a whole checklist that you'll go through with goods. I mean, the key to it really is good securities counsel, and big shout out to Laura Anthony and her firm for being our partners on working on this.
Okay.
And it's a good accounting team that can really, really do the diligence and make sure everything is clean before you merge your private company into your public one. It is now. I will say it is great because it's quicker than a direct listing, and ultimately SPACs are really they're just RTOs. They're just RTOs that have been pre-funded.
Exactly.
Yeah. So it's really you can. I wouldn't say you can completely interchange the two, but they're very similar. The only difference is an RTO is actually public. A SPAC has to identify its target assets, roll them in, and then take them public.
Yep.
In an RTO transaction, basically. So
but first you just said you really didn't like the RTO, or do you?
I say it with some caveats. It's a love-hate thing. It takes quite a bit of effort. We had to identify, I think, 3 shells before we found the proper target to put our private company into it. So, and then of course there was, you're at the behest of the SEC and FINRA when you're talking about doing the name change. Prior to that, our target was a Chinese healthcare group, and so there was a little bit of name confusion there before we had the ticker symbol change. And that took a little bit longer than we thought. So I say I don't love it, I guess, like I said, you're at the behest of the SEC and FINRA, and depending on what they do and how long it takes them, it can delay some of your it can delay some of your ability to move forward as a company and to market and talk about it. Yeah.
Okay. And then this question was asked. So how do you guys make revenue? I mean, maybe you can't give a detailed thing of an example, but how do you? I get what you were saying, that you find social media things and create brands around it. But do you have a real world example of something you've done where you create I don't know.
So we have sorry, cut you off. Yeah, we have three main revenue streams that we always identified from day one that we work on. The low hanging fruit for us is your traditional brand deals. That means a company will come and market with us and ask our influencers to post, and we'll take a percentage of that. So that's your traditional agency model or management model that there's a lot of them out there, but it's something that's low hanging fruit, and we do that. So Boohoo, for example, is a clothing brand that paid us.
Which one?
Boohoo, Boohoo, or Fashion Nova, if you're familiar with them as well.
Yep.
And they'll pay. I don't know if I can disclose the amounts, but they'll pay X amount of dollars, and they will essentially have us create content at one of our content houses, and promote and tag the items on any number of channels, Instagram, Snapchat, YouTube, etc. And then we'll negotiate rights on it, whether there's worldwide usage and perpetuity, etc. So that's where it gets a little bit more complex. But then on top of that, the second tier of monetization is intellectual property. So we have our own YouTube channels where we get just your basic Google AdSense. We also create original shows that we sell off to one of our preferred partners is Snapchat. We love them, and they're great. They're great vendors with us. And then our third tier, which we're currently in the process of, is we're acquiring companies right now that our influencers can co-own through our public vehicle, and which they can help promote. And we also invest in our influencers as well. Lindsay Brewer is one of our premier creators. She's actually we are the title sponsor for her racing in Formula 4 and in Touring Car World Cup this year. She may possibly be the first American female in Formula 1 and in IndyCar in the 21st century here. So,
got it. Okay. And then Christian, do you get out there? Do you have like a YouTube channel? Like, do you, or do you go on Clubhouse at all?
I don't really. The demo we have is a little bit younger. I don't know if they want to be seeing me, but I do have a YouTube channel. I don't post to it anymore. Been working quite a bit on this company, so I haven't had the chance to go and create content. But there may be something in the future.
We'll just have you on monthly.
Yeah, just have me on Benzinga. I'll be here. So
yeah, like it's a misnomer of the viewers because we syndicate out to everyone. We're like the Associated Press of the stock market. So you'll see this interview on Robinhood later. You'll see it on E-Trade. You'll see it on Webull, Ameritrade. You name the brokerage, it's on. And then obviously like Yahoo Finance. We have a guy in our chat who's always on it. We have Gary V on tomorrow. And there's awesome. He's saying there's no thumbnail, no promotion, nothing on the homepage. Email, tragic. He's right. I mean, it's hard when you have all these moving parts to get the everything. When you get everything going on a boat in the right way, things are amazing. But we got to get better. But yeah, so your company is definitely interesting, and how you're taking these assets and it's probably hard for you in the sense that what do you say no to and what don't you experiment with? Like, is it that water bottle? Is it this? Like, who knows? You know what I mean?
Yeah, so we happen to have this piece of software that we acquired called Magiclytics. Magiclytics, yeah.
Who the heck created that? That's a great name, Magiclytics.
Magiclytics, yeah, Magic Analytics.
I know. Do you want to share it right now? Do you have it on?
I can share it. It's
no, I mean, like, do you want to share your screen and show what it does for you, or no?
Oh, I don't have. It's on my phone right now, so I can't operate on here.
All right,
it's on a mobile device, but what it does is it helps brands identify which influencers to work with, and it actually provides what product they can sell at what price, and then within about 70% accuracy, the true ROI, which is really interesting. No one's been able to do that quite yet. So it's a company that acquired a lot of data from a bunch of portfolio companies out of a local venture fund here in LA, and through all that data sourcing, it's got a combination of AI and machine learning, and it's basically developed its own algorithm that can predict, so that before first dollar is spent, brands can identify whether or not, because sometimes they think it's just like this black hole or black box of why am I spending $50,000 on this influencer campaign and why am I not seeing a single dollar back? Most of the times they've justified by saying there's social awareness, but ultimately they want to see performance-based campaigns, similar to like how you go do a Google ad spend or you do something on Facebook, right?
Yep.
Calculate some ROI.
Okay, one last question. How do you compare, and maybe you don't look at the competition, but how do you compare against IZA Worldwide? I know it looks like you have a bigger market cap, but how do you compare?
Yeah, Isaiah is a traditional agency business, and the truth is, in venture we always say agencies are not venture backable because you're always looking for that 100x or 1000x return on your investment, and it's because and Isaiah tried to change that right in the market, and props to them for trying. I've actually worked with their platform before. They're trying to make brand deals a little bit simpler. They're trying to make campaigns that involve a lot of creators or a lot of assets they have to deal with. They're really just trying to streamline that process. The problem is at heart, they're really just a agency with sort of like call it an ERP tool. So, I'm not, I don't want to talk bad about them, but, I think they're trying to solve a problem. I don't know if they've quite reached that yet. I think there's other ways to go about it. And yeah, that's my comment on Isaiah.
Okay. All right. Yep. Yeah. And when you have new stuff to announce, let us know. We'll get the word out. Break the stories. I don't know if you've seen HOFV, who has an NFT, but when we broke the story on their thing, stock moved 160% on our news.
Yeah, we are definitely we've definitely been doing research in NFTs. I obviously can't talk about the future of it, but
no, but I'm not even going there. I'm saying to you, when we broke the news on HOFV,
a
lot of these companies go to the Wall Street Journal and break stories. Things have changed. I'm saying when you have stuff to break with us. You issue a press release like normal. You do it like a little bit after. If you go read the Wall Street Journal, you'll see tomorrow morning they'll have 3 or 4 public stock stories they broke. And then if you Google the stories, you'll see a press release comes out an hour later. That's all I'm saying. Break it with us because we'll get I know the Wall Street Journal has the cred, but you'll see.
Yeah, no, I mean, I will
I'm Jason. By the way, I'm Jason at
Benzinga. Back of mind, so
I know I'm Jason at Benzinga. It's all public. Everything we do is all transparent and all quality. I'm just saying there's other ways to get news out instead of the journal. But congrats on your company and the growth. And I know you got a lot of pressure to find the new deals and find the next big one that's going to ramp up. But it just reminds me of venture capital investing. I've invested angel investing. I've invested in about 18 startups. I don't know, probably 20 by now. Not huge amounts in each one. I'm not investing huge amounts. I do it like a little small syndicate of people. And out of the 20, there are 2 home runs. And that's in your thing, you could have that. Maybe your hit ratio will be better, a little bit better because you already know who the influencers are. You're not betting on people that aren't influencers yet. So that's your hit ratio will probably be a little bit stronger, I would guess.
Yeah, we get access, and because we have a decent sized market cap, we can do deals where they're post revenue companies, and because we have access to quite a bit of deal flow out here, being that I've been at 2 funds, Lamppost Group and Amplify, and now we have the help of someone up in Silicon Valley with Andrew Mori, and I'm sure we'll sign on some more people as well. So we definitely get a good amount of deal flow and hope. I mean, that's a good batting average, honestly. You're looking for 1 or 2 companies to return more than the fund, right? You're looking for 3 to 5 or so to return a little bit. You have another few that you're going to take a loss, and then you got another. The rest of them are going to take a complete loss. So as long as you can get a good IRR on the long term, then you're great on it. And I think what helps us is we have this network reach of almost 300 million people, so we can kind of like turn on and say, hey, test it out. If it works, it works. If it doesn't, it doesn't. We'll move on to the next company to look at.
Exactly. I mean, we've had our losers that went to zero, but we have 2. One that we invested in a $39 million valuation that's public now for $13 billion, and one that we invested at a $20 million valuation that's public for like $4 billion. And and then we had the other ones where it went to zero. Yeah. But these 2 more than make up in a ridiculous way, which just makes me so the A16Z, that's the thing that's awesome with him. I know it's not the firm, it's Andrew, but he's smart, and it sounds like what you guys are doing is smart, and it's going to help spread the word. And we bring a lot of these guys. Like I have Kevin O'Leary on a lot. If there's ever angles, let us know because
I'd love to bring him on next time. He's a founder, or sorry, not a founder. He's an investor in both rounds of the Clubhouse app, and based on what he wants to disclose, I'll let him do that on his own. But would love to have him on as well. So
Wait, he's not. Oh yeah, you're talking Andrew. Okay, yeah.
Andrew.
Yep. Okay, cool.
Yep.
All right, that sounds good. We'll do that in the future. Thank you for coming on again, Christian Young, guys. He knows his stuff. He has experience. The symbol CMGR. Expect to hear more stuff from them. Maybe Benzinga will break it. Jason at benzinga.com. And we appreciate it. And take a look. And there were more questions. We didn't get to them all, but we will in the future. Thank you for coming on. And congrats on Andrew joining as part of an advisor to your company. It's a big one.
Thank you. Thank you, Jason.
Yep. Thank you. You too. Bye-bye. All right, guys. I said I would share my screen and do a trade. It's cost me a bunch of money because Spencer Israel made me bring on the guest first. He didn't make me. I kind of did it. It cost me a decent amount of money because I didn't make the trade yet because I wanted to do it for you guys. And so now I have to do it now. And I would have, whatever. You get what I'm trying to say. All right. So here you go. Whatever. All right. So my screen shared. Yeah, I'm buying this. Well, 102 is what I was supposed to be at. Okay, so there you go. I made a trade into Penn National, about 30,000. Before this trade, though, I did buy some calls today when it was at 100, and I bought those calls. I'll tell you the calls. Hold on, hold your horses. So I didn't make that too exciting, I know, but I did buy calls. Let's see if those calls are up right now. I took the sharing off for a second because I don't want to reveal the whole thing because there's a premium product for my portfolio, I guess, now where they get my portfolio every week. So I don't want to just put everything up there, but I know we have another show coming up. And a couple reminders. Gary V, he's a well-known social media celebrity, is going to be on the SPAC Attack tomorrow, I believe at 11 a.m. or 11:30. I should know this. I should have a schedule in front of me. And I know Internet Enforcers is mad, but it's okay. He should be mad.
It's 11 a.m.
11 a.m. Gary Vaynerchuk from Wine Library, then everything else in the world. Gary V will be on the SPAC Attack around 11 a.m. tomorrow. That should be exciting. We had a full day. I was going to see if we could bring on Portnoy. So, okay, here's what I bought. Wow. The stock is up. My call is not done. So I bought Penn National April 16, $110 calls for, I guess, $2.95 or $3, like $3, $3.05. So it's down a little bit. I bought $110 calls for April. Wait, no, this is the wrong date. I swear. Oh, this is one I already own. No, I bought new ones too. Let me see what I bought. Hold on. Let me get alphabetical order. That is what we'll have to do because there we go. I bought, all right, this is what I did today, guys. And I wanted to do this one live, but whatever. We had a guest on. I bought the June 18th, 110 calls for $9.20 a share. They're at $10.70 a share. $9.20, they're at $10.70. So we're up 17% on them right now. I'm not going to sell. And then I just bought $30,000 of Penn in the live markets. I'm not saying to you guys to go buy it and follow me into this one. When I buy these stocks and I have high conviction, I tell you, like in the sense of STKS and SAVE and a bunch of my other positions, I like Penn. I always like Penn because it's not only an online like app thing, but it's also the thing behind the thing. The stock sold off today because arguably Dave Portnoy and a sex tape that was being released. This is not new news. This is stuff that's been out there before. Oh, Spencer's here. Hold on. He just wants to say wrap it up. Just come on. You can just tell me. We have another show to go on, so I have to wrap it up. But so this is a different position for me. I've been in Penn for a while, and I just bought it when I saw it at 100 is what I was trying to buy it at. But I bought it at 102, 103. So that was what I bought. You guys got to see it. Real money on the line. And I did that because I said I was going to. So that's the story. We have another guest coming on. Gonna get good anchor. Keep them coming. Again, so tomorrow, Gary V at 11 a.m. 11 a.m. Yeah. I bought 30,000 in stock and I bought 3,000 or 4,000 in call options on it. That would be cool. Internet Enforcers, I'll do that. I'm going to do that too. Okay, I got to wrap it up. I'm going to do that. That's a new segment. And we got to wrap it up because I'm excited to, for our next show, one of my friends, Luke's friends. Luke talks to her all the time. She works hard. She's a crypto maniac. I got in the crypto world a while ago, but more so recently. I should actually have her audit my portfolio of crypto. That's what I should do. Catherine, what do you think about auditing my crypto portfolio?
I'd love that. When? Just tell me when.
Like, I get, if I can log in, I would do that. Like, we'll do that like next week. And
Okay.
I own I'm going to start buying coins. And then, Catherine, I have another weird question. You probably don't know the answer. What if Benzinga wanted to have a coin? Like, Dogecoin means nothing. What if we created the BZ coin? Okay. And then also, Catherine, I don't know if you've looked at it, but BitClout, where you can, invest in so I love that concept because I tried to do that many years ago, but it was like the SEC didn't like it. So I didn't do it. But why do people who are in the public eye make sex tapes? Such a bad idea. Maybe a company that secures your tapes would be popular. Webcoin, he made the tapes before he was in the public eye. And guys, I don't know. I don't know. There's a whole thing with bars with Penn and Dave Portnoy today, Catherine, and it's probably stuff we don't want to talk about now. But that's just someone just commented. So all right, I will let you take it over. But yes, you got to audit my Bitcoin holdings, and I still haven't figured out a couple things that I'm trying to understand. But you are awesome, and I've heard you have an awesome show coming up today. So if you're tuning in right now, guys, don't leave. Slam the like. Get excited. We have the one and the only Catherine Ross. Take it away. Next show.